Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets. Hope everyone had a great Christmas. It is the day after Christmas, December 26th, and we're going to be taking a look at what happened last week in the markets using the S&P 500 and applying these time-honored techniques to try to make sense out of the chart. And this will be our weekly review for last week, and also we'll look at the last day of trading and see if we can make some sense out of this. Before we get into it, though, I want to remind you that the website and this video are for educational purposes only, and that nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Okay, first thing we're going to do is look at a 2-hour chart because I want to show you a couple things that I think could be happening here. And what this chart shows is the right shoulder of the head and shoulders pattern that led to this really swift sell-off down to the low 1100s. Then we had something of a series of potential rallies that really kind of petered out. And what's funny is we look back on it now, this really does look like a continuation head and shoulders pattern. And if we see it that way, it almost made its target when it got down to this 1080 area right here. But then the markets had that historic rally back to actually just under 1300. And since then, essentially the markets have gone almost sideways. We did make a call that when we saw this line develop right here, let me move into a 1-hour chart so we can see a little bit more of that. When we saw this line develop underneath this series of bottoms, we knew that if that broke, we could expect some fairly serious weakness. And right on cue, that line broke within probably about a week or two of us spotting that line, and it resulted in some serious weakness, taking the markets down to right about 1160, which wasn't quite as low as what I thought it would get to. But again, if we back out on a 2-hour chart, you can see that that also kind of resulted in a back test of this line right here for what that might be worth. Now, looking at a 30-minute chart, we have also been looking at a series of descending and ascending channels that have been working for about the past month and a half. Unfortunately, some of these channels have been getting broken on large gaps up, particularly the descending variety, the descending channels. And for me, at least, that has made trading a little tough on these because I tend to want to do it by the book, and the book says you wait for a back test of that descending resistance line. But the last 2 times we had one of these channels break up, that simply hasn't happened. So that happened back on the 28th of November, and happened again last week on Tuesday. We had that big gap up. Now, if we look a little bit closer at a 10-minute chart, we can see that once this channel did break up, one could make the possible case that that this whole move up and out of this channel has been an ascending wedge. Now, I want to caution folks a little bit. Sometimes ascending wedges play out perfectly exactly the way you think they will. Other times they end up being more like a leg in a channel, and you don't get that huge move down as much as you get a move down to some other level of support that isn't quite what you're looking for. So I have snapped this parallel line right here that lines up with this low back on the 21st. Just wondering if we, when we get the next round of selling, will that line hold it up, or will that break? And if it breaks, then I think the markets are going to head back down and retest some of these lows in the low 1200s. But there's some other things going on that are interesting as well. If we look at a 30-minute chart here, you can see that there is this dark purple line that I have drawn in the least, what's the word I'm looking for? In the least optimistic position. In other words, there is a possibility that we are looking at an inverse head and shoulders continuation pattern here. And if that is the case, I don't want to draw that purple line right here and say, hey, we broke out late last week. I don't want to do that. I want to draw this line over the left portion of the head, if this is an inverse head and shoulders, and the right portion of the head. So that would be this dark purple line right here. The reason I want to do that is because this light purple line is the neckline, the extended neckline of the large head and shoulders top that we had that formed through most of 2011. So rather than me drawing these lines in a way that makes this look like it's already seen a breakout, I'm going to be a little bit more cautious than that. So if the market gets any more steam on it tomorrow, and it's going to be a slack week because of the holidays, so we'll just, whatever happens this week, I'm sort of taking it with a little bit of a grain of salt, to be honest with you, because of the thinness of the trading, because there may be some tax loss selling. Also, people may be thinking, well, I'm going to load up for the January effect. So I'm drawing these lines in such a way to where if they break, I will know that it will be something significant. If we look again at a 10-minute chart, there's that wedge. It's, it looks fairly clear. You had some volatility, and you can see how that volatility is just getting squeezed out of the market. The only thing that's a little weird is the way the market just went sideways on us late on the 23rd, late on Friday. The market just went sideways. Is that due to the fact that this is not a wedge, or is that due to just the thin volume on Friday? I cannot tell you for sure at this point. The calls we made last week, well, it was kind of a mixed week, and I kind of suspected that. We did know to look for the end of this down move once we got out over this green line, and you can see that on Monday we gapped out over it, and that for sure was, at least for the next 4 days, that was a rally out of this descending channel. The mistake I made was in still, once again, wanting to do it by the book. I was looking for a back test of this line down here in the low 1200s, at which point I would have gone long in a big way. Instead, I just have some individual stocks that I'm long in. I'm not short anything right now. So that was what happened with the week. Really, everything seems to be pretty much as we expected, except for the absence of that back test. So going into next week, what am I looking for? Well, I'm looking for this line right here as a line of resistance. That would be the neckline of this possible head and shoulders continuation pattern. Then we've got this area of resistance, which is the neckline of our head and shoulders top. Additionally, we do have this wedge shape that we need to keep in mind as a possible precursor of some weakness. But then I'm also extending this parallel line right here because we can see that the markets have really wanted to move in parallel channels for the past couple of months. So I'm using that cue from this channel, and this channel that that we may be dealing with another channel here. So anyway, that's kind of what's going on right now in the S&P. Again, because of the end of the year, I'm taking this a little bit with a grain of salt, and let's just see where things open up on us tomorrow. Also this teal line right here. I'm going to show you a couple of the things real quick. This teal line right here is actually drawn over the 1370. Hold on, let me back out even more. Excuse me, not the 1370 top, the 1350 right of the of this head and shoulders pattern, drawn over the right shoulder and over this top back in late October that was right around 1295. If we look at that line, we can see, something. I'm trying to grab this here. We can see that we're really flirting with a breakout here. Let me come in even a little bit more. But because this is also under this potential neckline here and this neckline from the top here, I'm wanting to see a little bit mustard on that before I'm willing to say that that this line is being taken out. The other thing I want you to see on a daily chart, it is possible that that we start to consider this as a potential channel coming up out of this low area here. And if that is the case, and if this is a neckline and the market does rally up, then it looks like there may be a go here to try to match that 1370 top. If this inverse head and shoulders pattern plays out as one would expect such a pattern to play out. So there's the depth of our head. Let me adjust that just a little bit. And if we add that onto the neckline, that takes us up actually a little over that 1370. But, it's got a lot to overcome before it could possibly get there. So I'm just mentioning that. We got a pattern. It is what it is, and I think we have to respect the shape of it. And that said, we also then start to look for a possible reason or a possible formation that could lead to such a move. And this possible channel under this green line and over this green line could sort of define a new bull leg up. So guys, I'm not totally bearish here. Again, we're looking at a chart that has ambiguity. We're looking at levels that are critically important. This red line here is very important. If the market can rally over this line, then I think for sure we have overcome the influence of this head and shoulders pattern back here, and the market is going to start a new leg up, more than likely to test that mid $1,500 high, 1500s high. On the other hand, if this market turns over and takes out this roughly 1090 to 1100 area, then we're going to go down and test the 800s. So we are in between major support and major resistance, and we're just trying to take it day by day. It is my hope when we get into January that we start to see a little bit more clearly established direction. You can see the overall shape here. Let's move this line, put it where it needs to be, and move this line, put it where it needs to be. If we are in an ascending channel, you can't help but notice the fact that it is slightly constricting, but I wouldn't worry about that at this point because there's plenty enough play in between this line and this line to maintain investors' interest. You got to remember, when you have a wedge, a rising wedge, the damage by that wedge is done when investors realize there's no good reason for them to be in the market, and so they get out. Does that make sense? It's as the wedge develops here, and let's use the last 4 days as our lesson. As this wedge develops, you can see that from 1 minute to the next, there's less and less action in the market. So eventually, bulls who are looking for gains in a rising wedge, eventually they come to the realization that, there's just not enough in this market right now for me to do what I want to do, so I'm cashing it in. And that's what creates those swift down moves out of rising wedges. Conversely, when you have a descending wedge, the bears start to say, there's just not enough in this to justify the risk for me staying short in this market. The moves aren't big enough for me to really make anything. I'm taking my gains. And they cover, and you get that rally. So anyway, that is the weekly update and the analysis for what happened last Friday. Thanks for taking time out of your long weekend to check this out. And I hope you will also swing by sp500chart.com and check things out there too. By the way, I want to say something. I really don't like to tell people what to do. I just want to draw these charts, show you where I think the resistance and support levels are. If there's a really clear pattern, I feel that I need to point that out as well. So what you do with this information is obviously that has to be your decision based upon what you've seen with the ability of these old time-honored techniques to point out potential market directions. So look, take care. Hope you have once again, I hope you had a great Christmas, or if you don't like to use the word Christmas, happy holidays.